Yo, good morning, StockTwits crew. Welcome back to another episode and happy Wednesday. Happy CPI Wednesday. It's a crazy morning right now. We're getting a lot of movement to the downside. Market's not looking too great, but we're gonna cover everything. We're gonna talk about the earnings that happened last night and get ready for the day. But my boys, Daniel, Shay, how we feeling this morning?
Uh, I mean, it's a bloody morning, but it depends on what kind of investor you are. If you're a long term, maybe we'll get some deals finally because there aren't deals out there in the market right now. That's why I've been personally timid on the sidelines. If we get some volatility, some pullback, maybe some moves towards our 21-week EMAs, maybe I'll get some entries to my high conviction names. But I don't know, Daniel, how do you feel about these kind of mornings when you see these CPI prints?
I think we're all getting a big callus to all this stuff. You know, we had the Japan carry unwind trade, then we had the tariff trade, and then we had this inflation thing, and the thing just dips, and then it feels like there's enough low volume activity. People buy back in, they kind of see every one of these dips, and they fill all the gaps, and then it's like we get up in the morning, it's like bloody red. I used to like get hives, like on those mornings, like oh my god, my half my net worth is going to be gone by Friday, and then like after that Japan carry trade day that we're like by the end of the day we were up, I was like, this market is just incredibly resilient, and I don't actually fully understand why, because there's a lot of bad stuff out there from the economic data standpoint.
Well, do you think it's more on the narrative that Trump is going to be so pro-business that there is a high floor, or is it more that there's trillions of dollars in money markets that worst case scenario will get infused into the equity markets because rates will go down eventually, just nobody knows when.
It's everything from the money that sat on the sideline. People want to put it to work. People are chasing these gains. There's a ton of FOMO in the market. I mean,
Hmm.
we talked to this one guy that was just starting to follow all the Pelosi trades. Oh wait, that was you, right, Shay? I'm just joking. But
He's not wrong. He's not wrong.
there's money to be made, and like the thing is I think every one of us, it's like standing around a craps table that everyone's screaming red hot all the time, and you got money, and you're like watching what's going on. You're like, God, I don't want to sit here and wait. You got to have that patience of like Warren Buffett, and just most people don't. So they want to get to work and they want to find the deals in the market.
Yeah, absolutely. Well, let's get into the daily rip. Let's recap what happened yesterday and prepare for the morning. Here's the heat map from yesterday. Kind of mixed up. Not crazy red. Obviously, this morning it's looking a little bit different than this. But as of the close yesterday, not too nasty. The nastiest I'm really seeing is Tesla. Just continued downside there, continued weakness. Yeah, I was pretty wrong there. I mentioned I was getting long like last week on some options contracts. We were up slightly for a little bit, and then woke up Monday morning, and obviously those were down. So I got rid of those really quick because we were breaking key levels that I did not want to be holding through. And then my next spot was at 326.50. And if you look at where Tesla ended up yesterday, it's pretty much where we consolidated and bounced from midday, and then just kept the downside going. So a lot of weakness there. We're gonna keep eyes on downside levels that I'm watching on like the weekly, higher time frame. But anything stand out to you guys on the heat map from yesterday?
I mean, Tesla. Look at
Yeah,
that. It is
I
a
mean it's
bright
nasty.
red. I will say, like Tesla, I don't know. Elon's making a massive bet. I got into Tesla with the AI software vision. I could care less about the EV company, but clearly he's cannibalizing his EV side of that business, and he's putting all his chips on autonomy. If he delivers, he's gonna look like a genius. If he doesn't, oof, like
Yeah,
oof, oof, oof.
I mean, that one's still trading at, just an extraordinary forward PE. I mean, it's
Yeah.
totally in a league of its own in terms of valuation against its peers in the Mag 7. Um, but I think the sort of almost spirit animal of a Tesla buyer is totally different than the investors across most of the rest of the Mag 7.
I would
These
agree. Yeah.
people, and I'm in Tesla, not like a huge position, but I'm in Tesla. And I just believe, like, if you're like a buy and hold long, I mean, that's one of those charts you got to zoom out. Like, it definitely has its volatility, but if you zoom out, people that have bought and stayed with Tesla have done well. But like, for you traders, like the trading component, man, that the
It's
volatility of that
tough.
stock is so unpredictable. And right now, he has alienated half of the buying market here in the U.S. and really around the world. I mean,
Hmm.
I love what he's doing with Doge. I mean, I'll put that on the record. Like, I love seeing us, because this is going to help inflation. Like, it will help inflation to stop
Hmm.
this silly spending. But he has pissed off half the world. Half the world is not even seeing
Yeah,
what's being done with Doge because of the way it's being reported.
100%.
I mean, like to be frank, like I can't get a Tesla. My fiance is not a fan of Elon's. Like that's a perfect example. And also like I do want to call out where
You can live
it,
vicariously through me, Shy. It's okay. It's okay.
if you want that exposure to that AI bucket, like it's really difficult for me to like for you not to have Tesla into that bucket where they're if they do solve autonomy, that is the greatest real world AI application out there. And that's not even including the humanoid component if that comes to light. So like I do think it's the valuation on traditional metrics is whoa, this is dumb. However, you got to price in the future if that actually does, if Elon fulfills his vision of what Tesla's going to become, it's going to look dirt cheap because the earnings that's going to come with software margins in his business in 5, 10 years, it's going to make this EV car business look, wow, they were having less than 20% gross margins. That's crazy. Now
His
they're
time,
40 to 50.
his timeline's the problem for everybody. Anybody that knows, like, it's just like, when do you get in? It's like I believe he'll do everything he says. I just don't believe he'll do it when he says. I mean, that cross country drive was like 8 years ago, and it's like just getting to fruition. Hey, another standout, just by the way, and I know you're super bullish, Shy, because I've looked at your tweets, but you know, Palantir got a little slap in the face after like this ridiculous run. And by the way, great company. I mean, look, I read your stuff. I was in on $8 on Palantir. I got out. I
Woo!
sold cover calls. I sold out at about 45. Never worked with the company, so it's one of the few tech companies I was able to invest in. Believer at the 5 bags. I thought this was a great return, and then I actually watched it just run, and you know, and I've scratched my head the whole way. Talk about like these companies though, Tesla, Palantir. There seems to be a frothy, exuberant sort of set of bucket of companies that there is no traditional way to evaluate them because people just have no sense of whether they can execute on what they're saying, and if they can, they might really be worth these valuations, these ridiculous valuations.
I mean, you nailed it. Where I think there is obviously a risk on AI cannibalizing a lot of tech companies. That's a massive tsunami that's going to come eventually. If you prove that you're not going to be disrupted but actually thrive and charge unprecedented pricing power, the market's going to reward you with a premium valuation. That's what's happening in Palantir and Tesla. Like enterprise AI, real world AI, they've cemented themselves into permanence with the AI theme. But Palantir, like I've been trimming my position. Like I got in with you like under $10. I've been trimming and there's nothing I could do about it. It's still my number one position. Like it's 12% my pour. I've trimmed 50% in the past couple months. Like it's a crazy run it's going on.
Yeah, you can't really do much more than that. I know you were saying that you're like I keep trimming, but it just keeps becoming more a big portion of my portfolio. I don't know what to do. It's hilarious. SMCI latest surprise delivered a business update on its fiscal second quarter, posting adjusted earnings per share of 58 cents to 60 cents per share on revenues of $5.6 to $5.7 billion. Those measures were below the consensus views of 61 cents and 5.77 billion. Additionally, its revenue guidance of 5 to 6 billion for the current quarter is unlikely to meet the 5.92 billion Wall Street estimate. Notably, the company said it expects to file its 10K for the year ended June 30th, 2024, and 10Q for the quarter ended September 2024 by the Nasdaq's February 25th deadline. CEO Charles Lang said the company is paving the way for $40 billion in revenue during fiscal 2026, well above the $29.2 billion consensus view, even though fiscal 2025's revenue missed estimates by a wide margin. Shares surged 8% after the bell on this optimistic outlook. However, a minority of users feel more cautious, waiting to see if the company can actually meet its deadlines to file audited financial statements. StockTwits poll indicated that 2/3 of the 3,700 plus respondents view today's $700 million convertible note offering as a positive, with the Nasdaq's deadline approaching. Time will tell if the optimism pays off. Just looking at SMCI here in the morning, it looks like if you were long, if you were short, it's not looking good for either side, to be honest. I'm pretty sure the option sellers are gonna bank on this one, and you could have seen that from a mile away if you were looking at the options contracts pretty much this entire week. The implied volatility has been ridiculous. I think the shortest dated contracts yesterday were still over 200%. So, I mean, that told the story, right? If SMCI was stuck in the super tight range consolidation on the daily and we saw that type of IV, then it's a little different story. But you're seeing that type of IV after getting, this big momentum move up. it was sketchy for me. So I didn't want to touch that with the 10-foot pole, and I'm very glad that I didn't, because I mean, look at the charts now. So curious on your guys' thoughts on SMCI last night. Shy, maybe if you want to take that. I know we were hating on it a little bit, and obviously this wasn't an amazing report, but some optimism coming out of it, I guess.
I mean, I just don't know who would buy this stock right now. Like, it just doesn't make sense. Like, everything investing one-on-one, it doesn't make sense of buying this name. Let's just go to what management said on their call, where they slashed their 2025 guidance. Like, it wasn't just a casual slash. I think it was a 10 to 15% reduction. However, they're dangling the $40 billion 2026 revenue targets as it's okay for the short-term pain, guys. Like, look at this shiny little 2026 target that we have, and they're banking on a Blackwell ramp up, etc. That's not the real issue. It's not the top line revenue. It's their profitability is eroding. The margins are collapsing. They used to maintain 17 to 18% gross margins for years because they're the first mover advantage. HPE and Dell start entering the market. Now we're getting Foxconn starting to also enter that market. And now their gross margins are collapsing to, I think, 11 or 12%. This is disgusting, in my opinion, from going from 18 to 11 to 12%. That tell on the gross margin compression is your tell on if a company has a pricing power or any kind of competitive advantage, and it doesn't. This is purely a commodity of a company. Like, there's nothing special about it. And that 2026 target isn't really a forecast, in my opinion. It's a misdirection, and don't be suckers to gain the name. But I'm really harsh on it. I want to hear Daniel's input on SMCI.
Yeah, I'm not going to give a lot more comfort to the investor class or the traders in this audience about this company. First of all, it's always been sort of the race to the bottom company in this particular space. As an insider in the industry, you know, the quality levels of the Dells and HPEs are seen as higher. SMCI was always seen as the company that was chasing so even their margins before, they were still the bottom feeders in terms of the competitive pricing. That was how they put themselves in the market. You know, Lenovo is also in this race. You got 3 or 4 big high volume producers. Everybody's a little beholden. There's an Nvidia tax in this number that everybody's just got to be aware of. Nvidia controls pricing, you know, because that's the real demand. All the real demand is for Nvidia. They don't really care whose box it's in. And, you know, we can have this argument and debate all day long, but there's a lot of competitive forces in the market. I love how he threw out that 40 billion because it's not a forecast. It's just like a passing comment that, you know, is a super great way to attract sort of dumb money. It is, because like he's not actually putting a guide out. It's like, we think we can get, you know, it's like I'm going to tell tomorrow, I think I can get to $1 billion in revenue next week. It's like, you say that, but this isn't a real guide. It's not something that you've filed or that you've put out there. It's not a consensus data point. It's kind of like hey, if Blackwell ramps, if this demand keeps surging, if Rubin comes to market quickly enough, we think we can possibly hit this number. Great. I'll buy later. Let me see some, let me see some indications in the market. And by the way, let's just call the elephant in the room. This company still has massive audit risk, massive, risk of either criminal or civil activity that took place. There was a reason EY bailed on them. I just don't believe that a Big Four accounting firm will ever walk away from money if they can make it. It's just not their style. And then they basically, what did they bring in? BDO, which is like, again, the bargain basement, big accounting firm that was apparently willing to do the work, which we don't know yet.
The pushover firm. That's what they're known as.
You really have to have like a huge appetite for risk right now, because there is some upside. Like, we know there's upside here if everything comes clear and these numbers are real. We saw how far SMCI could run. But like, gosh, there's a lot of other places I'd go back to Tesla right now if you want to play roulette. Like, if you want to play market roulette. Yeah, this is scary to me.
And it's a trading vehicle, guys. Like, it's not a long-term investment. So, and also like the margin compression we were talking about, that was on best case scenario on numbers that are probably going to get audited to the downside. So who knows what the real numbers are.
Yeah, not looking good for SMCI. AI earnings summaries now on StockTwits. We mentioned this yesterday, but make sure you guys are checking out all the AI summaries. They're coming soon for all major earnings events, making StockTwits the premier spot to listen to those earnings calls. So you get a recap of the results, especially I know a lot of people are, busy throughout their day. They maybe can't sit around like we can all day and listen to these calls. You're busy out and about. So it's nice to have these AI summaries where it just gives you, the bullish outlooks, the bearish outlooks, and kind of a overall just summary of everything. So love to see that.
Margin
What else we
decreases
got?
are never good. Like, just that's one of those big things you got to ask why, especially if there's not big investments being made.
Yeah.
Totally. Like you're seeing all the big tech, like margins are kind of compressing a little. That's why their earnings are getting hits. It's AI related investments. They're trying to get the compute necessary. Snowflake last year, everything margin compression was they had to get the compute necessary to create these go to market products. I don't think SMCI is doing any kind of investments to compress their margins. It's just they really
Pricing
are.
pressure.
Yeah,
Pricing
it's pricing pressure.
Yeah. Upstart gets a major lift after earnings. Several popular stocks are popping on after hours earnings. We got fintech leader Upstart is soaring 26% after the bell, following better than expected earnings and revenues. Its first quarter revenue guidance topped estimates, with analysts liking strong origination volumes and positive adjusted EBITDA. Rideshare giant Lyft is falling 10% after its revenue and earnings topped estimates, but first quarter guidance disappointed. Lower pricing and the loss of a key partnership are anticipated to weigh on bookings growth. We got DoorDash is dashing higher by 6%. This thing has been kind of a killer, to be honest. Higher than expected revenues offset and earnings miss. Management anticipates some deceleration in first quarter 2025 due to macro factors and tough year-over-year comps, but signaled that new verticals like grocery and convenience exhibited strong growth. Then we have Zillow sinking 6% after its fourth quarter revenue topped estimates, but earnings missed. Its outlook for a subdued housing market in 2025 weighed on the stock. Its higher rates and record prices freeze activity in many key markets. So a little bit mixed here. I love to see DoorDash continuing to do good. I know we were talking about that the other day, Shy. But just funny, like when I first think about DoorDash and like when I didn't look at the chart at all, you don't think like, oh, they're absolutely banging, and they're doing pretty solid. So shout out to that. But any names you guys wanna touch on here?
Yeah, I mean, DoorDash has like surprisingly strong fundamentals. I didn't think they would, looking into them, but they definitely do. But let's talk Upstart, and I want to kind of get Daniel's opinion about this because he is a SoFi bull, so he knows the fintech space probably better than I do. I'm a thematic investor. I don't love fintech, but for Upstart, I've always said the biggest problem is their reliance on third-party capital. Like they don't have the bank with deep, sticky deposits. Like they depend on institutional investors to fund their loans. And you saw what happened 2 years ago. That was their Achilles heel. And while funding conditions have improved the past couple of years, like they're still volatile. Like if rates stay higher for longer, like the CPI prints indicating that might be the case, like they might find itself in another liquidity crunch. Who knows? And I do believe like they don't really have that much of a moat. Like they don't have the balance sheet of a bank. They don't have the market dominance of a FICO. I do think that if financial institutions decide to adopt their own AI underwriting model at scale, which I think is a low-hanging fruit that they're going to, what is the advantage that Upstart has? Like I just, it's hard for me to see that. But curious on your take on Upstart, since I know you know this landscape way better than I do.
Well, first of all, I mean, this is a move on earnings that just doesn't make any sense to me at all. It's so much bigger than I think the company is. I don't think, like you said, I don't think it has a moat. Now, this has nothing to do with the fact that I am super long on SoFi. They're very different companies, what they do. I mean, this is like a lending club kind of thing, in my opinion. I guess there's just always this outsized demand for people to get access to capital, that banks just aren't lending. I mean, there's tons of difficult, circumstances, but I'm not in here. I mean, I'm not exactly the guy that went on CNBC and didn't know what Upstart does, but in all my reviewing of the company, I can't understand this move, but it's always great if you're a bull here, if you've been patient here, I mean, it's great to get rewarded, and it was a good result. I was actually going to touch really quickly on the Zillow one though. I think it's super interesting. Trump's calling out for rate cuts right now. We got hot inflation, and I posted something in a response to, I think it was the Unusual Whales. I posted something in response to them talking about Trump asking for rate cuts. And it's like, what the hell is going to happen to real estate if this rate continues to consolidate? I mean, I'm an investor in a few local banks. I was talking to the chairman of one of them yesterday, and he was telling me like people are in at 2% and 3% loans on their homes. Anyone that has an arm is going to get adjusted to 7.8. Anybody that wants to move has to be comfortable with a 7 to 10% 30-year note. You're talking buying power getting sliced in half, but we haven't seen any meaningful declines in the pricing. I have no idea how real estate, and then commercial is even worse. Like, what is going to happen with real estate in the next 2 years if we can't get rates down by 2 or 3%?
No, I think you nailed it. People just aren't moving. That's why we have a supply issue. Really do. And I just think, like you said, like the 2 to 3% jump, it's triples. Like, is it worth moving out of your current home for like a spacier place or even like a condo if you're going to be losing that much money on just interest rates alone? Because that interest expense is just getting wasted. It's not at all towards equity. So there's no incentive to move out of your homes, and I think we have a supply issue. And
but this is like we're outside of our bubble of traders and investors, right? The investor class. Like, most people's wealth is in their real estate. I mean, that's like the average person. They buy a home. They were told, like, from the time they were little, like, buy a home, pay it off, gain wealth, retire. It's like, I saw a thing yesterday, by the way. I mean, I'm just a little, since we're getting economic data, it was like, if your parents made $80,000 in the 90s, you need to have a total home income now of about 250,000. That is how much inflation has eroded our dollar over the last 3 decades. So, like, when we hear people make $250,000, you're like, oh, that's great living. Well, if your dad made or mom made 80K in the 90s, I mean, it's insanity. People are buying $1 million homes, and you walk in, like, that used to be a dream, like $1 million mansion. $1 million home now is like,
that's normal.
2 beds, 2 baths in LA.
Yeah, it's not even anything crazy anymore. It's crazy. Just a wild world we're in. Here's the economic data for today. We had CPI come out. Obviously, we talked about that a bit. Fed Chairman Powell is testifying again as well. We got EIA energy inventories. Fed Bostic speaking. Fed speakers all week, so watch out for those. Monthly budget statement at 2, and then Fed Waller speech at 5 o'clock Eastern. So we won't have to worry too much about that because that'll be after hours, but still, something to keep an eye on. The pre-market earnings going on. We got Gold, CVS, Biogen, Anavex Life Sciences, Kraft, Invertive Holdings, and then after hours today, it's going to be fun. We got Robinhood. I'll be watching that. That'll be a good time. Reddit, QuantumScape, Cisco, Fastly, Trade Desk, Paycom, Upwork, AppLovin, MGM, and Albemarle. So plenty of companies reporting tonight. Shy, I know you're watching some of these. Are you interested in Hood? I'm sure you're watching that one.
Well, today is essentially an ad tech day in my eyes. We have Reddit, we have Trade Desk, we have AppLovin. It's a coin flip. Like, we got conflicting data points from big tech where Meta and Amazon showed weak ad numbers. Netflix and Google showed strong ad numbers. I'm worried about Trade Desk. They have a premium valuation, and they're obviously the go-to outside the walled gardens, but like, they're priced to perfection. Jeff Green absolutely delivers every quarter. He had like one slip up, I think 3 quarters ago, which was a really rare feat for him. So that is one that's at risk. Robinhood, they also have a premium attached to them. Like, they are caught in between, value them as a brokerage or an actual tech company. They're in the middle. And I do think that their UI experience is actually a moat, but they've run up, and I don't know what the crypto volume is going to be. That's going to be a good pre-read maybe for Coinbase's tomorrow. And Paycom, I think Fintech's going to go like these kind of like the Bill.coms, Paycoms, etc. Like, they're going to consolidate. It's just the products are too duplicative, and it's going to go through a massive consolidation. Who knows? And Fastly, Cloudflare is a gold star in the edge computing space. Maybe it's a good enough environment for Fastly to actually do decent numbers. Like, they only have to produce decent numbers for them to catch a big, because it's been bad corporate governance on their end, and they've suffered. But curious on your take on any of these names, Dano, if you're watching anything.
I have a long-hate relationship with Fastly. I got crushed on that company. I really thought, 3 or 4 years ago, I thought that was going to be massive.
Yeah.
It just has not played out. A couple of things I'll call it. One is, you saw Vertiv this morning, one of the big supposed winners of the cooling opportunity around AI and data centers, crushed its numbers. It guided conservatively. There seems to be a lot of conservatism in the guide. It's kind of a weird phenomenon, though, with all the CapEx spend, but everyone's guiding, so everyone's saying we're going to spend a ton more, but we're really not sure when the revenue is going to come. I mean, no wonder investors are nervous. I mean, that's like the worst combination is uncertainty on outlook while you're increasing the amount of money you're putting out on non-revenue generating, immediately revenue generating activities. When you said about fintech names, Shy, like, look, I love SoFi, but man, Hood's the name to own. It just is. It's a flyer. I should have. The two were at the same price at one point. And gosh, I should have moved at least half my wad into that one. I did not. And I just want to say, I went on Fox Business at some point when Reddit IPO'd, and sometimes you gotta just apologize for your sins. I absolutely did not see this being a monster. I said I did not get it. I did not believe it. And Reddit has done nothing but outperform. So sometimes you got to take your lumps when you get something wrong. So far I've been wrong on Reddit. That data is proving to be worth something because people are paying bigly to get access to it. And one last note is Cisco is a really interesting bellwether in terms of the broader enterprise side of AI trade. Because everyone's focused on the hyperscale data. I mean, that's where all the cool trading is happening, is these buying. But like enterprises implementing AI, they're not going to all be using Light, and they're not all going to be using InfiniBand. They're going to use 400 gig networking, and they're going to do branch type of distribution and edge. They're still a real bellwether. I mean, they're still a huge company.
Well, I think Cisco, it just has that stench from a couple decades ago, which sucks.
Well, they're supposed to be the Nvidia, right?
The Nvidia.
Nvidia is supposed to do what they did or whatever, which is wrong, by the way. It won't happen.
That's funny. Oh my gosh. Moving on, we got the nice composite stock below resistance. So this looks good to me, honestly, though. Looking at the trend, I mean, this has been in a beautiful trend, higher lows, higher highs. You are seeing a bit of resistance up here at the top, but I mean, until I see real weakness, I wouldn't be scared. I don't know if I'd be putting in any positions right here if I'm thinking longer term, but just keeping an eye on those higher lows. If we get a break of structure to the downside, that's when you start to worry a little bit. But for me, this looks great, and again, until I see a break of structure, not really gonna worry here. What do y'all think about this one?
It's been 18 months since SPY has touched their 200-day moving average. Like,
Yeah,
I don't know what the
happen.
record. I don't know what the record is, but like it is extended. So it feels like consolidate. It feels like this year's gonna be a range bound year for the indices, which is going to be healthy for like everything to kind of catch up with it. So I don't hate it. I will love it if it was like range bound in this area that we just called out on the chart over here. But I'm here for it.
Yeah, staying range bound. What about you, Daniel? You got any thoughts?
Yeah,
on that?
I'm gonna let the chart readers read charts. This is not my
Got
specialty.
you. Gotcha. No worries. Here's the Tesla volatility and volume. Help time a Tesla turnaround. Yeah, we'll see. For me, I'm really taking it level by level. You see on the daily chart, I mean, we broke that kind of consolidation pullback we had. It was looking clean and constructive, but you really see that aggressive selling coming in over the past week. So as soon as we got, a real break of structure to the downside of that consolidation, I immediately pulled up 326.50. Why that level? Go look at the next daily low. It's like that is the next daily range low. And that's exactly where we pretty much ended up yesterday. So really, it's all about, for me, watching this level. If we can, hold price, get a little bit of sweep of price on the daily from that previous level, then, okay, maybe we can hold up here and see some buying. But I wouldn't be surprised if we need to go to the next daily lows, which that specific level.
You guys see those pictures on Twitter all the time, or X, that show like a line of people buying at 450 and then nobody buying at 326. Like, this feels like one of those moments. Like, if you believe, I mean, look, I always say, like, you don't want to catch a falling knife, right? But like when you believe in something, if you I see what's Kathy Woods got like a 5,000, she's got this, like, if I were her, then if I believe what I'm putting out there, you should be buying like crazy right here. I mean, and if you're long here, you probably won't catch the bottom perfectly. No one ever, like, rarely do you ever do that. But like, if you believe in Shy and your hypothesis, this is an ad. I mean, maybe your fiance won't let you own one, but she doesn't know how many shares you're buying, does she?
Yeah, I mean, she doesn't. I don't know if she ever will. But the issue with Tesla is, like, I have an overweight position. It's top 5 already. I got in under 200. I don't have the urgency to buy more and have more of a weighted in my portfolio because end of the day, CEO changed his name to Harry Balls. That's a perfect example yesterday. Like, I don't want too much of my net worth assigned to like the unpredicted to Harry Balls. And like the move it had since the election, it was purely narrative driven. Like everything that I believe in the company happened last year. The market started believing it after the election. But whenever a stock rises from a narrative that's not backed by fundamentals, like it could get deflated quickly if there's any kind of FUD narrative. They have some FUD headwinds right now. So I think if we fill that pre-election gap at 270 to 280, I would start accumulating most likely because I do believe they might be a $10 trillion company, but I want to be in software. I'm sprinting towards software right now, and I think I want some more Snowflake. I want those kind of names. So TBD.
Yeah, makes sense. Shout out DeFi real quick. We're gonna have a special guest on, Mr. Russell Starr. I think he's ready to come in right now, but we're gonna get some chats going. There he is. Is it working? There you are. Russell, how we doing, man?
Doing really well, guys. Loving
Good
the
stuff.
chat.
Oh yeah, it's
Inflation,
been an interesting
fintech.
morning with all this. Yeah, how we feeling
all
about
good.
it? How we feeling about it with DeFi lately, especially? I know DeFi's been doing pretty well. Yeah.
Well, look, the company's been doing great. You're always subject to kind of the whims of what's going on with Bitcoin as kind of the bellwether in the space. And then obviously, you know, up in Canada, I'm not necessarily sure we get the same eyeballs that Exodus or SoFi are getting down in the States relative to our revenues and our earnings. But obviously that's cured with a NASDAQ uplist, which we're trying valiantly to get through right now. So things are really good, making lots of money, just horrible valuation, great company.
Yeah, I gotcha. So I see you
Yep.
guys, you added to the MSCI Canada Small Cap Index.
Yep.
Talk to me about that.
Look, they basically it's a like any index in the world. They take three separate dates over 3 months. They measure your liquidity, your performance. It's measured against basically every other small cap company that's in and around you. And then they have, you know, additions and deletions. So we happen to be one of 3 companies that were added. I think there were 8 that were taken out, but the net result is minimum probably 5 million shares of buying, could be as much as 10 million shares of buying, which is never a bad thing when you're put into a pretty meaningful and large index. Obviously today isn't the best day given the inflation numbers, but you know, as I keep on saying to everybody, like stop looking at the day-to-day volatility in Bitcoin. Listen to what Lutnick's saying. Listen to what Sachs is saying. Listen to what Trump is saying. It's a pretty clear trade on a U.S. Treasury, Bitcoin, crypto, you know, longer term play. So worry less about what's going on a day-to-day basis with inflation and worry more about what the longer term trend is.
Yeah, I agree. If you're not actively like day trading it, right? Don't be worried about
Yep.
that intraday volatility. Oh my gosh,
No.
it's yeah, you don't have to worry about that. Daniel, I want to bring you in because I know you're pretty big in the crypto world. You have some investments there. Do you have any questions for Daniel or like any thoughts about any of this going on?
You know, I'd love to get your take. A couple of things. Being up in Canada, obviously it's a slightly different world there. It's been a lot of, there's been tariff fair. There's been,
Yep.
you know, significant sort of change in your leadership with your prime minister, with Trudeau
Yep.
leaving, and a potential vote, possible shift to a more conservative party, as we're seeing
Yep.
kind of around the world. I'd love to hear kind of what you're seeing up there day to day, because like, you know, oddly down here, it looks, you know, it looks like that economy, the way it's kind of being presented is struggling, but
Oh yeah.
kind of what are you seeing and how do you feel about kind of what's going on, and would that be better in your eyes? I don't want to get you too politically charged. I don't know if you want to go down that lane, but I'd love to hear a bit about how you see those things coming together and
No,
driving your business.
look, I'm really happy to talk about it. I mean, when you say we've got a change in leadership, I'd say what leadership? Trudeau is maybe the worst prime minister this country's ever had, ever, and literally is still just playing games while we're going through, you know, Trump levying tariffs. So you've got Trump Trump in the U.S. and then you got Carney, Vreeland, and Trudeau, who are sort of this triumvirate of kind of masterful idiots that created this economic agenda, which basically has destroyed Canada's competitive level over the last kind of 8 years. So, you know, could Poilievre make the change? From a conservative perspective, I certainly hope so. I could never put my money with the Liberals ever again. It's been a really, really ugly last two terms. And whenever you have a prime minister who's hiring more people for CRA, which is our revenue agency, our tax collection agency, when you have someone hiring more people than the private sector is being hired, there's something wrong. so if your way of increasing taxes is by hiring more people to collect taxes, you've got a government that's asleep at the wheel. So yeah, it's frustrating, man.
Is your position popular? Like, are you can you go to dinner with your friends and family there? Like, because I've kind of wondered about this, the way like the media positions things to what I'm hearing from you.
No,
This is the popular position. Everybody's sort of done with the current.
Yeah, I mean, you still have the really tried and true red. No matter what, I'm going to vote for the Liberals. But it's pretty hard. We're an economy that's going to live and die off of our natural resources, not our manufacturing. And what really just shocks me is Trump is making it so clear. Look, he wants our water. You guys need it. He wants our energy. You guys need it. He wants our uranium. You guys need it. He wants our critical elements. You guys need it. And then we've got Carney basically talking about a green economy where none of that will actually be exploited. And then Vreeland, who's kind of was the master puppeteer part two of the Trudeau Gong Show. And then you have one outlier, which is Poilievre, which is the Conservatives, who's basically saying, look, we got to get this east-west pipeline going, because if we don't do that, we have to actually succumb to all of this Gong Show Trump commentary about us being the 51st state, because we need the refineries. We don't really need them. If we had the east-west pipeline, we wouldn't need them at all. But then you have Quebec. Anyhow, it's a real mess up here. And I guess the biggest difference between our politics and your politics is Trump is just way better at deflecting. He part of the reason I think he's signing 100 executive orders every day is so that no one actually knows what's really going on behind the scenes. So whereas up in Canada, we're just asleep at the wheel. It's frustrating, man. Really frustrating.
Yeah, good stuff, Russ. Yeah, I'm curious how we looking for. I mean, I was looking at just Bitcoin in general.
Yep.
And it's just so quiet right now. I'm not necessarily like bearish at all, but you see we kind of sweep those weekly highs, and we're just not really doing much, just sitting here. I'm curious on your thoughts on like the big dogs with Bitcoin and Ethereum, especially Ethereum down so much, and we see a lot of institutional, well, not institutional, but like big guys buying, such as people from the Trump family,
Yep.
right? A lot of people like putting a lot of money in there. Curious what you think about Ethereum for the future.
Well, look, Solana's giving Ethereum a real go, and then Sui's going to be giving Solana a real go. No one can question Ethereum's use case. It's just, I think you've got prettier girls at the dance right now. And
Makes
when
sense.
you've got a Sui and a Solana, it's kind of the faster money or the more interested money is following the trades that are actually winning right now versus the trades that are either net neutral or losing. And let's be honest, this is a momentum based trading landscape right now, right? Like we were joking earlier about fundamentals. When you like we haven't even talked about DeFi's fundamentals, but we're trading 7 times last year's earnings, and probably 2 or 3 times this year's earnings. Exodus and SoFi are trading at what, 40, 50 times earnings, if not more. The way I think about it is I'm worried less about Bitcoin, just because Trump, Lutnick, Sachs, these are all smart, sophisticated traders / investors. They're not going to announce a treasury strategy and then start buying. They're going to start buying wait until they get a critical mass of Bitcoin and then announce it, so that they're actually not chasing Bitcoin all the way to 200,000 or 300,000. At least that's what I would do as a previous trader. I don't want to be driving my asset class higher with my own news. And so I view all of this sort of sideways trading or even weakness as an opportunity to get long names that are already trading really cheaply.
Well, I would be more scared if I saw like real aggressive selling, right? You're not seeing that
Yeah.
at all. It's
No,
just
you're
sideways.
seeing. Well, I think what you're seeing is just smart traders trying to take out stops and get longer and longer and longer into, a 3 or a 6 month announcement for the treasury strategy, right? If you guys saw that Lutnick interview about Bitcoin, what do you think about Bitcoin? I love it. What are you going to do? I love it. What do you think? I love it. Like it was just nonstop. I love Bitcoin, right? And that's the guy who's going to be running the U.S. Treasury portfolio. And then Sachs is, talking about the same thing. And then Trump is talking about the same thing. This is one where I think people aren't paying attention to what's being said, and they're paying too much attention to just the headline and not enough reading the tea leaves. And the tea leaves to me are you got to be getting long crypto names, and especially in my opinion, I love the altcoin names, and DeFi is an altcoin name, right? So
yeah, well, speaking of that, like, well, talk to me about, I mean, like 5-10 years in the future for DeFi. Where do you guys see yourself, and like what kind of opportunities do you see for yourself in the future here?
Well, it's funny you say that. I always say you got to have your 1, 2, and 5 year plan. So I think I mentioned the last chat we had. We're planning on launching, call it 50 of our 100 products in 3 new jurisdictions, whether that's Middle East, Africa, or Asia. It doesn't really matter where in those jurisdictions. And if we can get 20 million in those 50 products, that's $1 billion in each of those jurisdictions. And as you guys know, we make basically a 10% yield off of our AUM. So you get to 4 billion in AUM, you're doing 400 million in revenue, you're doing 380 million in net income, and probably 330 million in profit. So there's your 2 or 3 times earnings for 2025, whereas your comps are trading at 30, 40 times earnings. To answer your question with the 5 and 10 year, my worry is that we don't even get a chance to do a 5 and a 10 year, because when you're trading at the levels we're trading at, and even if we see a 3 or a 4 bagger from a NASDAQ uplist, what's to stop a Galaxy? Robinhood has got so much cash. They could come in and buy us for $2 billion, pay us 100% premium, and it would be like less than a couple hours trading of their stock, right?
Mm-hmm.
So you're looking at a situation where you've got this company that's got the most ETFs of any company in the world, trading at probably the cheapest valuation of any crypto company in the world, that's about to uplist on the NASDAQ with this massive growth strategy, not getting paid for it at all. And if I'm a banker out there, I'm looking at us and just salivating. Like it's whether it's Wisdom Tree, whether it's Monex, whether it's Galaxy, any of these companies, they lack the actual pure profits and that consistent revenue generation that we have, and we make for a really interesting acquisition target. So, the 10-year goal would be to be trading at 10 billion in AUM, sitting at the NASDAQ, and having a $50 or $60 share price, and being one of the premier go-to ETF companies in the world. The problem is, I just don't think we're going to get a chance to get there. So my 1-2 year plan is just to drive this as hard as possible, get some valuation, obviously get on the NASDAQ, get a lot more institutions in the name, and then probably you see some sort of a takeout. That's just my guess.
Yeah, no, that would be huge, especially obviously like for investors, that would be huge. I'm curious, like, talk to me like I'm the most average investor. Like, what would be the steps kind of for me to start learning more about DeFi and like kind of getting into this world? And where I can
Yeah.
actually get DeFi and all this.
Well, I mean, obviously the website defi.tech. We do have 5 research reports out from firms in the U.S. And the Northland research report to me is the best one by a guy by the name of Mike Grondell. Honestly, reaching out to me, I do all sorts of sort of group calls online. That's an easy way to do it as well. And then obviously, just Googling us and getting access to some of these research reports, you'll see them. We'll have the links on our website as well. So, it's not hard to get the information at all. And then if you are struggling, just send me an email at rstar, 2rs@defi.tech, and I'll get you anything you need.
That's awesome. No, yeah. So if you're in the audience, feel free to hit up Russ. It's not too often that you're, able to do that with, big guys in the company. So definitely.
Yeah,
take 'em up
we
on
try to make sure that we're pretty accessible, just because there's so much going on at the company. But
Well, it
yeah,
makes people
no,
feel safer, I mean, the fact that, they could come up and talk to somebody that knows what they're talking about, you know what I mean, and get their questions
yep,
answered. That's good. So,
yep.
no, it's great stuff. Shy, I'm curious. I wanted to bring you in if you had any questions or thoughts about the convo.
Yeah. So, if you let's just say you were in charge of the committee that decides the next leader of Canada, like what would you push towards, and what's like the kind of characteristics of the new leader that would really cement Canada into the next phase of their growth?
I don't think we have that anywhere in the current choices that are sitting in front of us. Like I'm not even sure if Polyev offers what we need. To me, you need someone who is basically going to be able to stand up to Trump and negotiate. Maybe not as an equal. Obviously, the U.S. is far bigger, but we have a lot of oil and gas that you guys need, and there should be a much smarter and easier way to enter into discussions with obviously someone who loves making deals, where you're leveraging Canada's natural resources to our benefit, and then helping the U.S. with our natural resources to your benefit. Any of this aggression towards Trump or Musk or these governments is nonsensical. I get why Trump is doing it, right? Like if you can create a situation where things look horrible, and then you offer an olive branch where things are, they're not horrible, but they're okay. That's the way you position a trade. But the reality is, we're the ones with the oil and gas, and you guys need it. So this isn't about becoming a 51st state. This is about, how do we as your northern neighbor help you out with uranium, which is obviously going to be critical for the AI, HPC trade, EV trade, which we have a ton of and a ton of production of. Oil and gas, which would be number 2, critical elements, whether that's rare earths or any of these other necessary inputs for the war machine alone, copper, that kind of stuff, and then make it more of a friendly, how do we help each other? You scratch my back, I scratch yours, versus this, we're going to slap 25% on. Well, then we're going to slap it on. Then we're going to slap it on. Like, no one wins in those situations.
Mm-hmm.
It just drives the markets nuts. No one knows, which direction to trade when you've got, all this mudslinging going on. So that's the way I'd approach it. I don't know the way we're going to approach it. I think it's going to be a conservative victory, just because the liberals have really truly done just such a bad job. But that's not necessarily a vote for the conservatives, right? It's a vote against the liberals.
Yeah,
Gotcha.
I mean, essentially, you want a better player in the high stakes poker game of
Correct.
what Trump's essentially doing right now.
Correct.
One other question I had for you as well is, as you know, like the crypto industry is cyclical. It happens in stages. In my opinion, the Trump and Melania coin launched the euphoria stage of the crypto space, where I think maybe next year, like, it goes euphoric and then the bear market occurs.
Yep.
But I also do believe like that's one question, part of the question, like what stage do you think we're in for the crypto space? And part two is, did they just open the floodgates of a very dangerous vehicle that a lot of bad agents can use? Where what's going to stop Putin from launching his own Putin coin and gain the funds necessary to fuel his war, or something on the east for Z to do his own coin? Like it's unprecedented, but if you have IP or celebrity status or
Yeah.
whatnot, like you can get a vehicle of a lot of capital, and that might be disruptive in the world's balance.
Yeah. So to answer your question in terms of what stage or what inning we're in, 98% of the world still hasn't touched these products. Like, everybody looks at iBit and Grayscale and, you've got Vanguard looking at a Solana ETF, I think, or VanEck, and everybody's like, oh wow, this is going mainstream. The reality is this is so far from mainstream. Like it's not even on 10% of investors' top five right now. And you're seeing funds really trying to get up to speed quite quickly because this is about to get institutionalized and it is growing faster, 2 times faster than the internet. So, this, I guess that's a long-winded way of saying, even if we just get 10 or 20% of the investing public into this, it could be a 2 or a 5 year trade. If you actually get the tidal wave that you saw ultimately for the internet, and that's the only real comp that I can give to what's going on now, this could be a decade-long trend, obviously with tons of fluctuations in it, lots of opportunities to buy and sell. But we don't know if Solana is going to be the winner, or Sui, or Ethereum. The only one that I think we can point to that's here to stay is Bitcoin. And the rest, maybe it's Ethereum, maybe it's Solana, maybe it's Sui. I don't know if that answers your question on sort of the timeline.
Yeah.
And then what was part two of the question? Because it was pretty broad based.
Do you think what Trump?
Oh, the meme coins.
Yeah. Open the floodgate for bad agents to leverage it for their own capital.
But you're always going to have bad agents in hot sectors. You're always going to have pump and dumps. Call the Trump coin, Melania coin, whatever you want to call it. I actually think that the battleground is already being fought, and most people actually aren't paying attention to it. And we're kind of in an economic war already. Gold has been where it's been being played, in my opinion, and the U.S. has been asleep at the wheel. And Bitcoin is kind of your second chance at that gold trade, in my opinion, where the U.S. does have an opportunity to somehow stabilize what one could argue is the worst balance sheet of any country in the world. Canada would be right up there in terms of balance sheet stupidity. Somehow these two countries are going to have to get their together and shore up what is basically limitless inflation. Like everybody, I don't know if I mentioned this. I have a master's in economics. I started my PhD in economics. Inflation is actually the printing of money. That's the true definition of inflation. The U.S., the inflation rate is sky high. You guys were mentioning, 80 grand, 250 grand. It's probably even higher than that. So what do you do in those situations to actually stabilize an economy where every single dollar you earn is being devalued by 18 to 20% every year, right? It really is probably Bitcoin. It really is. And so...
And then they want to tax it higher. They want to keep pushing, you make, I love... Charlie Kirk does this whole thing about like $1 that you make and all the different ways you get taxed by the time you're done spending it.
It's
and
crazy.
It's a pretty fun little riff he goes on. But like the TLDR here is that I think Bitcoin hasn't quite lived up to the promise of being a hedge against inflation, because it definitely moves with traditional equities markets, which doesn't react that way. So that's been one of the interesting things, is we've been kind of promised that it would be. I mean, like I am net long on crypto. All the things you mentioned, ETH, Solana, Cardano, Bitcoin, and Render are my 5 big positions.
Yep.
I believe in the
Yep.
GPU network. If you haven't checked out render.x, I'm
Yep.
not shilling it. I'm not recommending
Yep.
anything I'm saying. I'm just saying, but like, I definitely think this is a huge market, but it hasn't necessarily functioned the way it was positioned. The way it positioned is sort of decentralization, working against sort of the inconsistency and inflationary value of the dollar. It's actually sort of moved right in line with it, which I think has confused people that thought they were getting a hedge, because that hasn't
Yep.
actually been how it's worked.
See, well, to me though, that's the algos, right? And that's these. It's the algos who are trading, the citadels who are trading, 50 different equities against Bitcoin, and just shorting the crap out of Bitcoin, and then shorting the crap out of 50 names and trying to make 50 basis points or whatever it is. I don't think that it's not that it hasn't lived up to it. I think that it's just a lot more illiquid than some of these other markets, so that you actually can get some people messing around with it. And as that liquidity grows, like what I've always maintained is, once you get more of these ETFs, once you get more futures, once you get more of everything, you're going to see a lot of these $5,000, $6,000, $7,000 drops in milliseconds probably start to disappear, because you're going to get liquidity coming in from a multitude of other places, and then ultimately, I do think you see it stop trading as a risk asset and start trading as a hedge asset. But I think that hedge asset only occurs once the U.S. makes that treasury adoption, and that's either going to come through Loomis, who I think might actually do it faster than Trump might do it, right? Like, she's got that bipartisan bill that's pretty much ready to go, from my understanding. And whether it's her or Trump, the minute you see that happen from a game theoretical perspective, China is going to be buying Bitcoin. Russia is going to be buying Bitcoin, and then you've got that store of value.
Mm-hmm.
Hey guys, can I do a little just hosting for just 10 seconds here? If you looked at the market, so it was supposed to, we were crashing. It's like less than 1%. I mean, this is what we deal with. It's the world's ending. Inflation is hot. We're going to dump. And by the way, Shay, you said this off camera, but I think it's worth it to say to the audience out there, so much freaking low volume movement that people do. They love the Sunday night sell-offs. They love, and this is the case. And once markets open, it's like everyone's like, I'll buy that gap. I'll buy that gap.
Right.
I mean, freaking Upstart's up.
This is the market
30%.
now.
Yeah.
Crazy.
Yep.
No, we got to expect this volatility, these swings in price constantly, and then you look at these charts too, and just in the general markets, and it's like we've really gone nowhere in the past 2 weeks. Yeah.
No, it is. You know what I've learned, guys? Always have a stink bid, always have a stink offer in somewhere.
Yeah.
Like really,
it'll get tapped at some point, likely on some type of event like this,
just
right?
Don't forget about it.
Yeah,
obviously. but then have your core positions, right? And for me, I'm a little bit different. I'm just uber long DeFi, because DeFi represents basically 60 to 100 protocols, right? So I don't have to pick any one of those protocols that you were picking. We have a SUI ETF, we have an Aave, we have a Cardano, and we're going to have a bunch of other ones.
That's awesome.
So you get the diversified exposure, and then you get that fundamental value that no one is really picking up on as well, along with the potential uplist, along with now basically an index inclusion, which is likely going to see the stock substantially higher. So however you choose to play it, good on you. Just be aware that right now it's a trader's market, and you haven't got that long-term sustained bull. But I think you're safe this year for sure. I think you're safe the first 6 months. I think you've got a great trading opportunity here to make a lot of money in crypto in 6 months, maybe a year. And then I'm not too sure, Shay, whether it is possible that you're looking at some sort of a sell-off. I mean, you always have to have those cleanses. They're good and wholesome for the market. And then the other thing that no one's really talking about, but I sort of introduced it, is the M&A, right? Like Robinhood is going to get to a point where it's got to get bigger, and it can't get bigger doing only what it's doing now. And so you're going to see the Galaxies, the Coinbases, the Robinhoods. Like, what's that next iteration? What's Binance going to do? And that's where companies like us become really, really interesting, right? Because none of those guys are as profitable as we are. So you can fill Galaxy's challenges right now just with DeFi. Like, Galaxy takes over DeFi, they're profitable just like that.
Mm-hmm.
So it'll be really interesting to see how the trades occur, who's looking at what, when it occurs, what level. All I know is you want to take some money off here, go for it. But chances are in 3 to 6 months, you're going to be wishing you'd be a buyer, not a seller.
Yeah. Yeah, something to watch out for. Last question real quick before we
Sure.
before we wrap things up. But somebody in the chat was wondering how BlackRock opening ETPs is affecting DeFi, if it is affecting DeFi at all, or maybe in the future.
So they're launching a Bitcoin ETP in Europe. What people keep on forgetting are our ETPs are zero management fee ETPs for Bitcoin and Ethereum. So they're whether BlackRock's at 50 basis points, which I think that's where they are, or 30 basis points, there's no real incentive for anybody to leave our products because our management fees are already lower. Where it would get interesting is if they started getting into the SUIs of the world, but I just don't see them going down that market cap, because then they can't get enough assets for them to make money. You follow my logic, right?
Yeah, it just wouldn't make sense for them.
Yeah, BlackRock's better off sticking with, and these are just my opinions, but Solana, Bitcoin, Ethereum, Cardano, like pick your top 5, whatever they are. That's where they can actually make a dent. And then, in my opinion, for the rest of them, they're just going to look at a company like ours and basically be like, hang on a second. So we can buy another 100 of these ETPs. It's only trading at 2 or 3 times earnings. They've got 100 million on their balance sheet. Wow, we'll just take these guys out, and then you strap how many zeros on those other products because they're BlackRock products,
of course, yeah.
And they just trade, in France, Germany, Middle East, Africa, all these jurisdictions that we're looking to open.
Yeah, interesting stuff. Well, definitely plenty to watch out for the future. I'm excited and excited to talk more and have you on as DeFi just continues to do well. So.
Love being on here with you guys. Appreciate the chat. Appreciate the time, and
always a pleasure.
Yeah, let's any thoughts on where Bitcoin is for the next time we talk?
Let's see. In 2 weeks. Should we put in some predictions here?
Exactly.
I'll throw in mine. Here, let's see. Let me bring up the chart here. I'm gonna say. Oh, I'm gonna be a little bit of a bad bear here, and I'm gonna say we're under 95, so we're under where we're at right now.
In 2 weeks.
In 2 weeks, yeah.
Okay.
I second that. I think we're going to fill that 70,000 gap. I don't know when, but I think we're in that process before we hit that new all-time
Just go
high,
lower before we go higher, right? Like, yeah, I'm not big bad bear. I think we might need to go lower before we go higher, but we'll see.
I'm buying, holding forever, and not looking.
I love that. That's probably the best thing to do if you're an investor.
I'm just saying, like, the volatility is there. I actually buy every week, Bitcoin, Ethereum, Solana. I just have a time buy.
You're actively DCAing like every.
Literally, I was buying Solana down at 11, and I bought every week. I bought Solana all the way up, all the way down. I've just kept a buy on all this stuff, and I'm just buying so much per week. Look, it's a good asset class. I mean, to Shay's point, like, stay away from shit coins. Like, I really don't think the Portney thing is a good idea. Don't buy Haktua, don't buy Melania coin, but like these high utility, and of course Bitcoin as a store of value, it just makes a ton of sense, especially at all the bad monetary policy out there. We need alternatives. So, I'm not as good at price predicting. I don't do that. I go on TV all the time. Shay, everyone's like, what's your price? I'm like, I don't do that.
You're like,
I'll tell you what the technology does. I'll tell you what the technology does, and you'll tell me if it's going to be important. And I say it is.
Yeah, love it.
And I might as well go against you guys just to make it fun. I'm gonna say we're trading at call it 98 to 102, somewhere in that range. Still boring, right? Even if we're at 90 or 102, I don't
Nothing's
think
really
it's
happening there.
really changing anyone. But I'll throw in there that DeFi is probably at $6 Canadian.
Ross, that could be my lunch. We could be at friggin' 102. I mean,
Well, if you start buying, yes.
buy. Let's go. Let's go.
All right.
All right, guys. Well, always a pleasure having the conversation with you. Appreciate
Yeah.
you coming on, and for the audience, everybody enjoy the rest of the day. Be safe trading, and we'll see everybody bright and early in the morning. But yeah, Daily Rip. Enjoy the day, y'all. We'll see you tomorrow.
Thanks again, guys. Have a good one.
Have a good one.